During our stock analysis, we're going to explore the key pillars, examine the ownership, look back at past results, we'll find out what the analyst predictions are, as well as giving the business a valuation, and examine the potential return on our investment, and finally we will summarise our findings. Let's start by looking at the key pillars for the trailing 12 months. In the book Rule 1 by Phil Town, he suggests that these are the key metrics when first evaluating a business. The first pillar we are going to explore is the earnings per share. This is where we take the net income and divide it by the shares outstanding. The higher the number, the more profitable the company. Earnings per share is up by 32%. Now let's look at the free cash flow, which is the money a business can generate from its operations. Free cash flow growth is down by 9%. Then we come to the next pillar, which is revenue, and this tells us how good the company is at generating income before deducting expenses. Revenue growth has neither improved nor declined at 0%. Book value is calculated by subtracting the total liabilities from the total assets, and this indicates the equity growth for the company. Book value growth has improved by 9%. Now we want to turn our attention to the management of the business by looking at the return on invested capital and the return on equity. These two measures allow us to assess a company's efficiency at allocating capital under its control. The return on invested capital and return on equity are looking very healthy at 15% and 29%. Now we move on to debt, and Phil Town prefers a company that is able to pay off debt with their free cash flow within 3 years. With the current free cash flow, it would take just over 7.5 years to pay off its debt. In this next section, we will now focus on other key metrics which will help define an excellent business. Now let's look at the gross margin, which is the amount of money a company retains after incurring the direct costs associated with producing the goods it sells and the services it provides. Gross margin is looking healthy at 61%. Next we come to the operating profit margin. This tells us how much profit a company makes on a dollar of sales after paying for costs of production, such as wages and raw materials, but before paying any interest or tax. Brown-Forman have an excellent operating profit margin at 34%. For Terry Smith, free cash flow yield provides a more realistic view of a business's financial health and profitability. He typically looks for a company that has a free cash flow yield of 5% or higher. They have a good free cash flow yield at 2%. As we are potential shareholders, we will now want to look at the average book value growth for the last 10 years. And this is looking good at 12%. Ben Miller believes earnings growth is the biggest indicator to a company's stock price. Earnings growth is a stable 5%. I've included a link if you want to check out the investors page and see the annual report. This is Bitesize Investments, giving you a step-by-step approach to your investment journey. There are currently 4 super investors who own this company, and if we look back at Ken Griffin's previous sales and purchases, we can see he has both bought and sold shares in Brown-Forman in the past few years, and has increased his stake in Q2 of 2024. He has 14.5 million invested in Brown-Forman, and this makes up 0.02% of his overall portfolio. However, 3 other super investors have sold shares. Terry Smith has previously bought Brown-Forman shares, but over the last year he has been selling. He has 500 million invested in Brown-Forman, and this makes up 1.97% of his overall portfolio. Now we look at the past historical prices of the company, as this will help us build a picture of periods of success or failure the business has been through. We can see that from 2014 until 2017, Brown-Forman were going mostly sideways, but from 2018 till 2021, they started to improve their average share price year on year. However, since then, their share price has almost fallen back to the levels from 2017. On average, the analysts believe that the price target should be $55, but some believe it can go as high as $76. Analyst reports suggest that Brown-Forman is undervalued at the moment, and the overall consensus is that Brown-Forman is a hold. Collectively, the analysts believe the company will possibly go up to 31%, but can also shrink by 13% over the next few years. The next quarter will be incredibly important for them, as the slightest negative results could see them falling below $40 a share. So I'm going to use the current earnings per share of 2.16 as my starting point when creating a valuation. Based on a combination of past growth and future analyst predictions, I'm going to estimate the earnings per share growth to be 12%. I'm going to give Brown-Forman a PE of 25, and after that I'm going to project these forward by 10 years. We then need to include a 15% return, and this gives me an estimated future stock price of $167 per share for its future share price. And then we work out a current value that Phil Town calls a sticker price, which is $41. Then we apply a margin of safety, and at 25%, this gives me a buy price of $31, and I personally believe that we'll see Brown-Forman go below the $40 mark at the next earnings call, but time will tell. If you found this video useful, click on the link to check out my last stock analysis. The return we would receive if we bought at our margin of safety price of $31 and sold in 10 years' time at our estimated future stock price of $167 will be 439%, but this is dependent on our assumptions for the company being correct. The current annual dividend is 63 cents, and this is decreased by 20.28%. The payout ratio is 39%, and this is within our acceptable level of between 20 and 50%. According to Morningstar, they believe that Brown-Forman have a wide economic moat based on their strong brand, intangible assets, and cost advantages. The bull case for Brown-Forman is that they've got iconic brands like Jack Daniel's, Woodford Reserve, and Old Forester, which all have global recognition and consumer loyalty. The company continues to expand its presence in international markets, and there is a growing demand in emerging economies. In addition, they have been innovative with their products, like when they teamed up with Coca-Cola, and they have maintained a higher profit margin on their premium products. The bear case for Brown-Forman is that the alcohol industry is heavily regulated, and this can have a negative impact on their operations and profitability. Their product is discretionary and therefore can be affected by economic downturns and reduced spending on premium products. In addition, they exist in a highly competitive industry with numerous global and local companies attacking their moat. If you've enjoyed the video, it would be greatly appreciated if you would like and subscribe to help the channel grow. And finally now we'll summarise what we found out about the company. When reviewing the key pillars for Brown-Forman, they've scored 7 out of 12. Under ownership, 4 super investors have bought in the last few quarters and 3 have sold shares. Their average share price is in a downward trend, and analysts are indicating that Brown-Forman is a hold, and they are predicting they will grow as high as 31%, but could also decline by minus 13% in the future. Using the earnings per share growth model, my personal buy price would be $30 or less, and if you click on the link above you can find out about my personal portfolio. According to Morningstar, Brown-Forman have a wide moat, even though they exist in a highly competitive space. My final overall rating is 3.5 stars out of 6, and I've given this a category C rating within my own stock watch list. Thank you for joining me during this stock analysis video. As I'm a relatively new channel, please consider using the comment section to help me develop the content I am creating. And don't forget to like and subscribe.